Hi, my name is Izak Odendaal. I'm joined by Victor Mupunga, and we're here to talk about the budget. We've just had the third attempt at the budget being presented in Parliament. Vic, budget doesn't occur in isolation. We've had a lot of global drama over the last couple of weeks. Things have changed a lot since the first budget was proposed back in February. Just fill us in on where we are with the global market movements.
Yeah, look, it has been drama over the last few months. I mean, just to put this into context, I think it's probably fair to say we've been fortunate or perhaps lucky in that this budget debacle has happened at a time when uncertainty globally has actually been more than the uncertainty locally. We are now about 100 days plus, in the Trump presidency, and it's fair to say it has been a period of extreme high volatility. We saw at the beginning of April how the tariffs were implemented, and we saw a massive sell-off in risk assets. Equities in some regions were down to the magnitude of 20%. Bond yields were up. The dollar was weak. And I guess the Trump administration got spooked by that market reaction, and we saw them pulling back, or at least pausing, the worst of those tariffs, and then markets quickly recovered. And so while all of that was going on, it was a little bit, let's call it difficult, for global investors to also focus on what was happening, in the southern part of Africa here. So from a context perspective, I guess you can say we were fortunate that there was more uncertainty globally.
And of course, President Ramaphosa is meeting with President Trump later today, so we will have to wait and see what comes out of that meeting. But has there been any good news in all of this turmoil?
Yeah, no, there certainly has been good news. In fact, if you were stuck in a hole somewhere and away from your screen for the last 3 months, and if you see where markets are today, you wouldn't believe, right, what has happened. I mean, if we look locally, our local market is at an all-time high. The rand earlier this week breached 18 rand to the dollar, in terms of being stronger, and this is the strongest level that it's been year to date. Bonds have also been doing well. But even globally, where this uncertainty has been happening, a lot of global markets are not too far away from their all-time high, in terms of, since that recovery from the tariff weakness, many markets are actually above that level now and very close to the all-time highs. But that's from a market perspective. But even if we look at some economic data, if we think locally from an inflation perspective, we had our inflation numbers earlier today, and we continue to see our inflation numbers with a 2 handle. That's a positive. The oil price has come down, which bodes well for inflation going forward. So there certainly are, a lot of positive spots that we can look at in markets and even in the economy. But let me turn it over to you, Izak. I've spoken about the positives in the market. Were there any positives in the budget?
Yeah, I think it's important to remember that whether you say it's a good or bad budget depends on your perspective, right? So if your perspective is from being a taxpayer, you want to see no tax increases. If your perspective is that you are an investor, you are, I think, much more interested in what happens with government's borrowing. Is there going to be more debt, less debt? What happens to economic growth? What kind of policies are being put in place? So from the point of view of taxpayers, the good news is that there is no VAT increase after the first 2 budgets had all the controversy around VAT. There's no VAT increases this year. I think there's still a possibility over the medium term, because they did include an unspecified tax increase for next year, and that's about 20 billion per annum. That could be a small VAT increase next year, but obviously they will be very careful in managing the political or the politics of it. There will be a fuel levy increase. As you mentioned, the oil price is quite a lot lower, so there's some room for a fuel levy increase. From a investor's point of view, I think the good news is that it's pretty much in line with what we saw in the first 2 budgets of this year. In other words, the debt and deficit ratios more or less the same, and still pointing to a debt ratio that is peaking this year and starts to decline over the medium term. So that's very positive. It means that we are kind of finally and gradually getting a grip on this debt problem that we have, and sort of clawing our way into more positive territory.
I think the other big question that has been raised over the last few months is certainly about the politics, right? The GNU. I think we're around about a year since our election. Any thoughts around that? Maybe takeaways, learnings, given what we've been through over the last couple of months in terms of the GNU?
Yeah, I think the political stability is very important, especially given the very uncertain global environment that you've sketched. So I think it's notable that the GNU is still around, that we still have the same coalition, And I think this time around, for the third version of the budget, there is broad consensus on what the minister tabled today. So I think that's positive. I mean, we don't know if this is going to last. Politics is always unpredictable. But for now, it looks like the parties have found one another and have found a working arrangement. I think we must accept that under coalition governments, the budget process is going to be a bit messier. We've become used over the years to a very smooth budget, and everything working like clockwork. I think in coalitions, it might be a bit messier going forward. Certainly, I think the minister and the team at Treasury have also learned lessons around how to manage the budget process, in the coalition environment.
Yeah, no, a lot of lessons learned. And I think even from an investor perspective, right, in terms of what to expect, in terms of budgets. Anything else that stood out, key takeaways from the budget?
Yeah, so once again, I think the main message is sticking to fiscal consolidation, getting a grip on borrowing. The fact that there's less tax revenue now because of not being VAT increases. They didn't borrow that additional money. So I think that's very positive. I think notably there was no change to the inflation target. There was some speculation that might happen. Those discussions are ongoing. And I think that does, in the near term, create some room for us to see lower interest rates, especially as you mentioned that inflation prints continue to be quite benign. And then still a very strong focus on infrastructure. So within the spending mix, very much trying to tilt that away from spending on salaries and sort of current spending towards capital spending towards infrastructure. So it's also from that point of view trying to look at how do we get the economy to grow faster over time. And obviously that is the best way we have of managing debt is to grow into the debt, essentially. So I think those are all notable and still quite positive. From your point of view, any direct impact on the local equity market?
Yeah, no, so I don't pick up anything that would directly impact the market. I suppose, the first thing that one would look at is tax increases, be it dividend withholding tax, capital gains. There was nothing of that sort in the budget. So nothing that directly impacts the market. But I want to add on to the point that you highlighted earlier on around faster economic growth. If I look at what we've seen in our local market over the last year or even 18 months or so, our local market has done quite well. In fact, I think even in dollars, it's done better than global markets. But the big question is, can this continue going forward? And I think the answer to that question lies in, part of what was discussed in this budget. When you start talking about how do you increase economic growth from the 1.4% that is estimated this year to a much more attractive growth profile, in excess of 2%, then you will start seeing faster economic growth that feeds into top line revenue for companies. It feeds into margins. And then, you start justifying a much higher multiple for equity markets. So while there wasn't anything directly that impacts equities, I think over the medium term, if we start to see the full benefits of some of those reforms that are being spoken about, the benefits of those investments, then one can certainly start justifying a higher multiple in our equity market. But if I'm just to tie it all together, it's like in terms of what would be the key takeaway message, I think if we've learned anything over the last 2 or 3 months is that at any point in time, there's a lot of uncertainty out there. Be it in the local market, will the budget pass, will the budget not pass? If we look globally, it's been tariffs. What tariffs is going to be applied to which country, etc. All of this speaks to a lot of uncertainty. But I think the key constant there is, one needs to remain committed to their long-term plan. If one had made the mistake to sell out or to ditch their plan on the back of tariff concerns or on the back of the budget, you would have missed out on the recovery. And so I guess the key message to leave with you is, stick to your plan. So what does sticking to your plan mean? It means remaining invested and not getting swayed by market moves or by the news headlines of the day, but rather keeping in mind the big picture of why you're invested over the long term.